So Jennifer, thank you for joining me. We just wanted to kind of, a lot of people are giving us questions and everything about what's going on in the mortgage world. So I know most of the people that are going to be watching probably already know you because they know me. But for the people that don't know you, tell us a little bit about who you are and your business.
Sure. So first of all, thanks for having me. Great to see your face. I'm a mortgage lender with Movement Mortgage, local to the Pittsburgh area. I have a team, and what we really focus on is helping people, realize the American dream through purchasing, a primary residence, a second home, or an investment property. And also assisting people to make sure they're in the best financial position possible through, evaluating and looking at potential for a refinance.
We're good. People are seeing us on Facebook.
Yay! Hi, everybody.
All right. So awesome. So that's great. So thank you for telling us a little bit about who you are. So how is this impacting, we're going through a lot right now, and that's, kind of the focus of what we want to talk about today. How is this impacting the mortgage world and your world specifically?
So my world specifically, working from home with 2 kids that are homeschooling, a new puppy, and a husband that is very technically challenged. So my wine intake has increased a little bit in recent weeks. So that's personally how I'm being impacted. No, just kidding. So really, functionality wise, I have to say my team and I are very blessed. We weren't impacted at all. We've always had the capability to work from anywhere. Many times driving down the road, I've pulled over, whipped out the laptop, got the hotspot going. So functionality wise, business as usual, haven't really been impacted. But things are changing. I think how we do business, how we communicate, the industry itself has changed. So the impact really is change. If you don't like change, you're in trouble.
What changes are you seeing? Like what are you seeing from that?
Yeah, so change can be viewed as bad. Me personally, I have to say, I think the changes we're experiencing are pretty positive. How we communicate. We have DocuSign, we've always had that for disclosures or real estate contracts, but we're using that more and more. Video conferencing, holy moly. I'm on video conferences, half my day. So that's a huge change in how we communicate and how we do business. Also, the industry itself, I don't think there's an industry out there that hasn't been impacted by some degree from COVID-19. Some industries are fortunate and they're thriving in this type of environment, and others are really struggling. And I think, if I'm being transparent, this has posed some, stresses on the mortgage and real estate industry. So it's forced us, Movement as a company and me and my team as individuals to change our mindset first and foremost. How are we going to get deals closed now that this is implemented, and that is implemented? So to dive into a little bit more detail, Movement as a company saw the market constricting, guidelines constricting, okay, where minimum credit score thresholds were being raised, debt to income ratio thresholds were being decreased, programs were just going away, and that really, impacts us. So Movement, fast to the fight, they're like, okay, this is a challenge, this is adversity, what are we going to do? So what they recently announced this week is we will be servicing all of our own loans. A lot of those guidelines, those constrictions are because of who we were selling the loans to on the servicing side. So now we have full control, and we have, we can get rid of all the pricing overlays, the lending guideline overlays. So we have, some of the best pricing out there, and we're able to help a lot of buyers that most other lenders and brokers are simply not able to help at this point.
That's fantastic. So a little bit about movement, and I think you can go expand on this a little bit. I don't think a lot of people, they hear Wells Fargo, they hear Bank of America, they hear these big names, but I don't think people, even in our market where you are here in Pittsburgh, I really don't think people realize how big of a player movement is, nationwide, or I'm not sure if it's worldwide, but I know, it's a lot bigger than what I expected. Or when you said you were going to movement from your previous company, I was like, who's that? So tell us a little bit, because I think there's a lot of people out there that don't even realize how big movement is. So can you shed a little light on that? I know that's not on our, we weren't planning on that, but tell me a little bit more.
Movement is a nationwide mortgage lender. We offer every program out there. We do even have a broker channel for kind of the out-of-box lending options. And, we're in every state, although I'm specifically solely licensed in the state of Pennsylvania. But what a mortgage lender is, it's not a broker. That's a big misconception out there. So a broker is an intermediary between the people lending the actual money and the client, okay? Where we do everything in-house as a mortgage lender. We originate, process, underwrite, fund, and now retain all of our loans in-house. So it allows us to be nimble, move quickly, get answers, get clarification on things. It allows for a very smooth transaction. Volume-wise, I'm not sure what we did last year. I know the year before we did like 11 billion, I believe, somewhere in that range.
Sounds pretty good.
Yeah, it's a lot. It's a lot.
I mean, that's what I have in my pocket right now, but
the other thing I'll say too is, yes, you do hear the Wells Fargos, the Chase. They're such a big company, right? So there's a lot of red tape, if you will. There's restrictions, there's overlays. Whereas movement is big. Yeah, we're definitely big. We're 50% owned by a nonprofit, a foundation, because we believe in getting involved in communities and giving back. But they have it structured in such a way where it feels like you're within a small company. Like I can call leadership on the phone and they answer, and I can get clarification on things. So they have it structured in such a way that there's a lot of support, and you almost feel like, yes, you're a part of this huge nationwide lender, but you have your own little community.
Yeah, that's great. I mean, not that this has anything to do with what we're talking about, but I agree with you. I feel the same way about, Berkshire Hathaway, obviously, one of the biggest players in the real estate industry worldwide. But, locally here, the owners of our company, and, they're very readily accessible, which is fantastic. When we have issues, it's nice to be able to, pick up the phone and have that person to have that, the ability to get the answer immediately. So that's great. All right. So let's get back to the topic of, what's going on in the mortgage world. So tell us a little bit about any changes you've had to make as, this has kind of all gone through. What are you doing? What are you seeing out there as far as changes?
Sure. So there's a lot of change. A couple things that I do feel it's important for people to know that are watching is how appraisals are being handled has changed. So Fannie Mae came out and said that they're going to increase the amount of property appraisal waivers. So every lender out there on a conventional loan, you're running it through an automated underwriting system. And it's reading the address, the loan amount, and the value that you have manually entered into the system. And it's going to say if it requires an appraisal or if it doesn't.
Okay.
So we are seeing an increase with appraisal waivers due to restrictions. But also what we're seeing is, as long as it's a Fannie Freddie loan, so a conventional Fannie or Freddie owned loan right now, and let's say it's a refinance and it's going to another Fannie Freddie conventional loan stream, then we're seeing where only like an external appraisal is needed, like a drive-by appraisal, if you will. Purchases, we're seeing that as well. And then, you know, some appraisers are asking that owner to send photos, like interior photos, things like that. But we, you know, again, are all banding together, masterminding, brainstorming, how can we keep business going without putting anyone at risk? Whether it's financially or health-wise, you know.
That's great. Yeah. I mean, I never really thought about that, but using, you know, interior photos from, you know, the seller, I mean, that seems, you know, logical. That, you know, make sure, you know, people are keeping their distance and, you know, still being able to get inside the house, you know, because the drive-by appraisal, you know, I think that, you know, that makes some people excited because it's like, ooh, that's great. The house looks really good from the outside, but it looks terrible inside. But other people are like, wait a minute, I want you to see my house inside because I, you know, have a, you know, $100,000 kitchen that you won't see as you drive by my house. So I get that. Yeah, that's great. So how about positive impacts? Like, what have you, you know, I mean, obviously we're all in a, you know, in the same boat here. And there's, you know, there's always good and bad of everything that happens. What kind of positive you know, aspects have you seen from all of this?
So one personal positive for me is, and I do think if you're a producer, if you're a go-getter in the real estate or mortgage industry, your work-life balance tends to get out of whack. I have no idea what you're talking about. So
being with my, you know, having Sharon as my partner, and you know, my work-life balance can be out of whack. I'm lucky that way. So yes, I understand what you're saying though. Sorry to interrupt.
Oh, no. So I mean, that's a personal positive for me. Also, I have to say, you know, we're all like banished to our homes. You have to stay at your house. But I am communicating now more than ever with friends, family, real estate partners who are also my friends, and colleagues. You know, every single day we have a Zoom call at 4 p.m. and it's our whole team, and we're just masterminding and talking about changes. And hey, you know, how are you going to pitch this now that this change is implemented? Or how are you dealing with this? Or how are you structuring this? And it really allows us to mastermind on a daily basis during a time of such volatility. I mean, things are changing so rapidly. What we talk about here today with regard to appraisals could be different tomorrow.
Yeah.
So, you know, communication, I feel more connected. I feel like a lot of my relationships have deepened, you know, since this. Better work-life balance. But one positive, Rich, that I don't think we've seen yet, but I think is coming, because I always try to see the silver lining, is my industry and your industry cleansing.
Yeah. I've actually been saying that for a while there. You know, I think one of my videos that I posted, I did say that there's going to be a lot of people that don't survive this, and they don't want to. It's not that they can't, you know, but they just elect not to, because it is you know, when you're in sales and you're 100% based on a product that you can't sell right now is. I mean, not that we can't sell it, but it's more challenging to sell right now.
Challenging,
yeah, you might go get a job, you know, to make ends meet, and I totally get that.
Yeah, I mean, and I think it's all about mindset. And in a situation like this where there's constant change, it's adverse. You know, it's forcing us to grow as individuals, and I think those of us that do withstand and come out on the other side of this, not only are we going to survive it, we're going to come out thriving, and we're going to be better at our craft because we survived and went through this time of change and adversity. So I'm really excited, actually.
Yeah, I agree. And it's funny that you use the word thriving, because that's actually our team's core values is thrive. And each letter has a saying. So, but it's it's kind of cool, because right now what we're trying to do is we're focusing on sharpening our skills and trying to get everybody dialed in, because once the floodgates open, like you're saying, you didn't say, but I think you were alluding to this, is it's going to be bananas. It's just go crazy, and I think that's that's going to be great. And I think that there's going to be people who are operating at a more cautious level, of course, but there are still going to be people at every time. There's a person that needs to buy and a person that needs to sell, and it could have nothing to do with the time of the COVID that we're in right now. That might not have anything to do with it. It could be unrelated. So, all right, what other kind of recommendations? What else would you like to share with our audience as we're talking here? What should we know?
So just a couple recommendations and thoughts I want to leave everyone with. You just said it, Rich. It's gonna be bananas. We came into this year low inventory with abundant amount of qualified home buyers. And I think, it's everybody's just waiting, right? So recommendation number one, if you are wanting or need to buy, sell, get your ducks in a row now. What else is there to do, right? Contact myself, my team, or a local financial institution that you have a relationship with, and get pre-qualified. And then I would also recommend that you send them all of your supporting documentation, pay stubs, W-2s, bank statements, tax returns, so that they can get you fully underwritten. That's something that Movement came up with, and Movement is still doing, where you send us your documentation. We are actually sending it into underwriting to be reviewed, so that when this is lifted and you're ready to purchase, you can hit the ground running.
Not only are you right there, I'm gonna put a timeout right there. I don't think people probably understand fully what she's saying right now and how valuable that is. So all right, so most lenders, they give you a pre-approval, and it's great. It's on your piece of paper and it says I can buy a house, fantastic. But then once it goes to the underwriting, they find a snag, or there's a little hiccup that doesn't let the loan go through. That's the problem when you have a mortgage contingency. That's when it gets a little wonky and has that opportunity to get kicked out. What she's saying is that hers is already through underwriting. All you need is an address at that point. And I don't think a lot of people see the value in that. I don't think buyers see the value in that. I don't think agents promote the value of that enough. Because if you're in a multiple offer situation after this, which I think is going to be the norm, because we just actually, a lot of people know that, we have a real estate coach. We actually have two. One of our calls was today, and what he said was that he's going to find that the buyers are going to come, and this is in the markets that have already shifted into being able to sell. The buyers are coming into the market faster than the sellers are coming into the market. So inventory was already low. Now inventory is going to be extremely low, and the buyer pool is going to be much higher than it would have been if we were on the normal path. So I just want to stress that, and I'll let you take back over, but I just wanted to stress how I really think that that's a great program, and I don't think people, fully take advantage of it or even understand it, how important it is, because it's just going to put your buyer in a better position once they're ready to go. Once they find a house, they're already going to be able to say, we're ready to go. I mean, it makes you that much quicker to close. It makes you everything about that. You could almost be like a cash buyer, but not quite.
Right, exactly. And you just touched upon it. I mean, in a multiple offer situation, this is really common sense. Ask yourself, if you have 3 identical offers, but one person has been fully vetted through underwriting, we've looked at their bank statements. They don't have any large deposits that can't be sourced that are throwing the numbers off. We've looked at pay stubs. They have verified income and they qualify. It's not that they told us they make $50,000 a year, but forgot to mention 25,000 of that 50 is commission, and they don't have a 2-year history, or it's declining. The due diligence has been done. The I's have been dotted, the T's have been crossed. So it increases your odds to win in a multiple offer situation. Also, if a situation presents itself and we need to close quickly, we can. Movement, it's like our norm, under 30-day closes for purchase when we can get an appraisal, a home inspection, title work, all that fun stuff.
Yeah.
So definitely, if you're seriously needing to purchase, I highly recommend contact myself, contact a local financial institution you have a relationship with, not someone online that isn't in Western PA. Don't do that. That's setting yourself up for failure and a really stressful process. And
I will second that. There's a company out there that may resemble something like Slow and Loans. Know that is going to be a very slow and painful process if you decide to go that way. There is no rocket to get to that mortgage.
Oh, I love it. So that was my one recommendation. Another recommendation I have is, if you are a homeowner, take a half an hour of your day and, again, reach out to myself or a local financial institution that you have a relationship with, and just have that conversation. Say, look, here's what I owe. Here's how far I'm into my mortgage. Here's my interest rate. Here's my goal. I foresee myself being here another 5 years. I foresee myself being here, or I want to retire in 10 years. Whatever your short-term and long-term financial goals are, have that conversation. Take a half an hour and have that expert put together an option for you. And you know what? If there isn't an option for you to refinance, then at least you have that peace of mind knowing you're in the best financial position you can be right now. So take that half an hour, call me. I'll have no problem working through scenarios with you, putting together options, and possibly putting you in a better financial position. Yeah, that's pretty much everything.
No, that's great. And we're going to put Jennifer's contact information in the link below or in the post below. So Sharon, are there any questions out there?
No.
She's monitoring the questions and answers. So good. We must have done a great job because there's no questions. So Jennifer, I just wanted to say thank you so much for taking the time to talk to us. Thank you very, very much for everything that you shared. Stay safe, and I can't wait to see you again in real life. It'll be great. I can't wait to see everybody. So it'll be good. But again, thank you. Any parting words as we go away?
Mindset is everything in this. I think a lot of people are struggling, being contained to their homes. So it wouldn't hurt to take, 5 to 10 minutes of your day, reach out to those you love and care about, those you do business with, those that have entrusted you to guide them, and just give them some love, say hi, say, hey there, how you doing? Checking in. That goes a long way during times like this. And, mindset's everything. Just try to stay positive. Try to see the silver lining. Someone at Movement said on one of the calls that really stuck with me is, did you have a bad day or did you have a bad 20 minutes?
That's good.
So I'll leave you with that.
That's good. I love it. All right. Well, that's perfect. That's a wrap on this interview. Thank you so much for joining us, everybody who was out there watching. And thank you so much, Jen, for sharing all this great information with us. All right.
Yeah, thanks for having me.
Stay safe, everyone, and we'll talk soon.